Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday, and we're at the 22nd of January, 2025, just getting on to 6:30 p.m. Central Time. Well, as you can see, most of the stock indices are lower, but they've had a neat rally. Now, what I was noticing today was the breadth of the market wasn't there. It was the indices that were holding up, but a number of the markets were starting to pull back. So maybe this rally off of Trump has run its first course and the market pulls back to get its feet under it. I wouldn't be surprised at that. Most metals are lower tonight. The dollar reversed up, and now you're going to get into this choppy period, I think, in the currencies. We have the European Central Bank, Bank of England, and us coming out this month very soon, making the monetary policy decisions. Ours is a pretty much foregone conclusion. We'll do nothing, but I think you'll see the European Central Bank cut. I think you will see the Bank of Japan raise rates. I'm joining that camp at this point. They don't have to, but the data, it's starting to act that way on the charts. We'll see what the Bank of England wants to do as well. They're all coming out. Bonds and notes, well, the market is holding. So we're in the 10-year note under the 4.5, I think we're around 4.57 going home. So that's certainly not near the 5% number we recently saw. And on the energy markets as a whole, bit of selling has come into them. So as we look at the S&P, the one clear thing is the market's back up to the old highs. That is bullish, not bearish. You can see how the market has come up here. It's in a resistance area. This is not easy to get through. This is the old area, so you've come back in a vertical price rise. Why vertical? Just take a look. Every single day is a higher high than the prior day, and none of the break lows are lower and lows. So this is one of these elevator rides. When they happen, they just happen. And the market looked at it and said, okay, I'm going. And the question is, what does it build itself on? It can keep going, but I don't see it. I think you're in the zone that calls for the market to give you a bit of a stall. Pullbacks to the 18-day average would be interesting, but that's far away. You're at 61.14. That number is near the 59.89 level. Where's the resistance? Right here. That's one of the reasons I'm looking on the chart up here and looking at the Bollinger Band and saying, all right, if you want to back off, you can. I'm certainly not in the bear camp, but I'm also not in the bull after that big rally like that. This market needs to consolidate those gains, get past the Trump victory. Also overbought. So as a technician, I keep my eye on that. It's not very different in the NASDAQ. You've got every single day with a higher high. So it came in off of here. It just kept going. It's 2 weeks of it. You're up to that area. It's not as clean cut with the resistance as the S&P, but you can see you're in a zone where that was the last high. You've done similar work in the micro, mini, Dow. Every day a higher high there, same type of work, not so in the Russell. Now, what's helped the Russell is clearly interest rates under 4.6 and sort of staying there in the 10-year. However, can it really pick up and run here? I don't know. I think that the market's wiped out the short area. We thought, and I went over with you over and over, especially down here, when you hit the 200-day in the Bollinger Band, go to the tapes. You'll see them. I said, I think the pros came out of their shorts there. I don't think they re-entered the long side. I think that now it's sort of wait and see. In the 10-year notes, it seems that the market's just churning against the 18-day average or very close to it. The short-term trend is up, but if you take out 109.08, you have a problem in the market. And I 108, what is that number? I think it's 108.5. Let me just be certain as to what we've got. Yeah, 108.5. If you take that out, you don't have a trend. And I don't know that you're going to carry this trend right here. Market's acting sort of strange. I think it wants to see what the jobless claims look like and see what that does for the market one way or the other. Obviously, the higher the number, the better, believe it or not, for an uptrend to develop in the interest rates, because an uptrend here means lower rates. But if you get real strong, it means the Fed's going to stay back for longer. You can see the 2-year note. It just stuck at this 18-day average, waiting for the next piece of news to do something. And as we discussed yesterday, I thought that the lower Bollinger Band would offer the support in the dollar. On a short-term basis, it most certainly did. You rallied away from that, almost 53 points. Let's see what the market wants to do. In the euro, I think it'll have a hard time getting up and over the upper Bollinger Band. I think it's ready to pull back. I think this is all the doctor had to write for the British pound. You went back to the neutral zone, the 18-day average of closes. And while the swing line is up, the bias has stayed down, and you're working off. You've done it, in fact, an oversold condition. I'm waiting for a new chart pattern to develop. I'm assuming, could be very wrong, that it's going to end up being to the downside. In Bitcoin, well, you went up the other day to new all-time move high, and you're consolidating at this point. Overbought in an uptrend, but need of consolidation. On the energy markets, you started flipping over today. You actually did it a little bit the other day in the futures. Let me just show you where this came from, right here, this day. When the market did this, it lost its bullish embedded reading, opening the door to get down to wherever the 18-day average comes in at. You rallied back the next day. Now you're starting to slip back. I wouldn't be surprised that you hit that. I think the same pattern's at hand here now in WTI. You're already there for all purposes. In the heating oil, same thing. You lost your bullish readings. You pull right back. You could be in a downtrend if the market closes under the 18-day average. And that gas, well, you never did embed. All you did is get overbought. You worked it off. You're still in an uptrend that's overbought. Any reading at 70 or above is overbought territory, and that's where you're at. So we'll discuss this and a lot more first thing in the morning. You have yourself a good evening. I'll catch up with you all then.